Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Don't forget, Insight is spelled I-N-S-I-I-D-E. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim. Great to be back.
The price of gold has just been skyrocketing, especially if you're buying it in British pounds. Now, how does Brexit, the British pound, and gold all work into your cycles?
Well, I'd have to kind of dissect that question a little bit. Let me address the gold part first, just to update what we've been talking about all along. And throughout 2015, even 2013, 2014, I kept publishing analysis why I thought 2016 would be the golden year, that would be the first major advance in gold, that gold bugs should really be waiting in 2014, 2015 until 2016. And that there were a lot of reasons for that, many of them cyclic, technical, but also fundamentals that I was viewing as well. And I explained how I thought 2016 would be, number one, the first significant, probably 6-month or so advance in gold and silver, but that would also be a harbinger of things to come in the 2016 through 2018 period, when I thought we'd see an even larger degree, more significant advance in gold and silver. And so that has been the case all along, and one of the things that I was tying into that and anticipating for 2016 was the beginning of a drawn-out period of fiat currency crises, and that being both the U.S. dollar eventually, although I'm looking more at 2017, 2018 for that, but other fiat currencies as well that for 40 years have been completely divorced from gold ever since the Jamaica Agreement of 1976, and that was the same time, back in 76, when gold began its parabolic move up into 1980. So we were a complete 40-year cycle from that. But with respect to the British pound, that had even more cycles come into play in 2016, which is what was leading me to suspect that Brexit may be a key trigger there. And if you go back to that same time frame in 1976, although there's a ton of other cycles that really add synergy to this outlook, but in 76 is when Britain had to go to the International Monetary Fund looking for a bailout of their currency. One of the really weakest points in the British pound. It had plummeted in June of 1976, and the bailout ended up happening in September, October of 1976. And so even that, from a 40-year cycle basis, which, we've been discussing that for a couple of years now. I've got a whole website based on just the 40-year cycle. it's just been uncanny in anticipating, especially some of these bigger macroeconomic type of events. And June 1976 was when the pound plummeted to all-time lows, and June through September 2016 is when I was anticipating another sharp decline in the British pound, and then all of a sudden Brexit, the vote on Brexit starts gaining attention coming in late June, and that just fit, from a fundamental perspective, fit perfect with what the technicals and cycles had been anticipating for quite some time. So that the vote for Brexit, I think, was a confirming and a reinforcing fundamental of what was already being seen in the British pound and in fiat currencies as a whole. And this time frame in June, July of 2016 is just the perfect time from a cycle basis for parabolic move in gold and silver to the upside. And when I say that, I'm talking about into kind of an initial multi-month high, but we could still see higher levels before we get there, higher price levels into this cycle, and a kind of a blow-off, sell-off in things like the British pound, although I don't expect to see a major bottom, a multi-year bottom, until next year, 2017. So Brexit certainly played into that perfectly, and like so many fundamentals, it came well into the cycle and is more of a confirming indicator, not a leading one. That's why I continue to advocate the use of technical and cycle analysis, because if you waited for the Brexit vote and the news of it to then start selling the British pound, you were too late.
It's interesting, Eric, how your cycles tend to match up somehow with world events that meet the certain points of that cycle. How is it that it works out that way?
Well, a lot of that I would attribute to human nature, and that things do repeat, kind of like that quote, too, about those that, excuse me, those that forget the lessons of history are doomed to repeat them. And just as a civilization, we tend to go through similar cycles as each generation goes through different phases of their lifetime. I think that plays a key role in it. But you also look at natural, and I'm talking about bigger picture natural cycles, and I've cited this one before, but the research they've done with solar cycles and the whole interplay on the surface of the sun itself, and that they've discovered what they call the Great Conveyor Belt, which has to do with moving these sunspot cycles throughout the sun, and that's a 40-year cycle as well. And so even the impact that climate has on business and economics, you go back and read books like Raymond Wheeler and what he did on climate and business cycles. He's got some very intriguing analysis on the interplay between the two. So I think that there's a lot of natural events and social, psychological events that kind of play into that together. And so that's certainly one of the things. And I think that there are, you don't just have those bigger multi-decade or multi-generational cycles, but you also have ones that come in a little bit smaller, a little more frequently, that people experience multiple times in their life. And that was, a perfect example was what I've been writing about the last year or two, as far as an 8-year cycle that has timed so many different things. People, longer-term stock investors, will talk about an 8-year cycle, and you can go back 40, 50 years and see many of the big swings in the market like from 1966 to 1974, and then to 1982 to 1990 to 98. You've got this very consistent 8-year swing in the stock market, but I have applied that 8-year cycle to a lot of other things. I've discussed pretty in-depth an 8-year cycle of attacks that have plagued America going back to the 50s and even back to the end of World War II. And some of the more recent phases of that 8-year cycle included 1993, when you had the truck bombing, the first attack on the World Trade Center. 8 years later, 2001, was all the events of 9/11 and even some of the attempted events after 9/11. 8 years later was when things started to shift tactics, and the massive cyber attacks on American corporations, government, institutes all started in 2009. And I've been saying that I thought 2017 would be another escalation and shift in that 8-year cycle. But what I'm applying that to right now, excuse me, in this discussion, has to do with, again, the British pound and how it has just had an uncanny 8-year cycle going back to really about 1960, 1968, when you had some major crises in Britain, and then leading into 1976 when the pound plummeted to its lowest low, and they had to do that bailout. And then 1984 was a similar plummet in the pound and skyrocketing unemployment. 8 years later was 1992 in Great Britain, and that's when it's so notorious for George Soros and him almost single-handedly dooming the British pound by speculating against it, forcing England to withdraw from the European economic mechanism. 2000, you had a similar plummeting of the pound in Britain, led to their highest gas prices in the developed world, all types of protests, and ended up being food rationing and shortages of gasoline. 2008, you saw the British pound plummet 35% in about 14 months, and that 8-year cycle was coming back into play in 2016 when I described late last year and early this year, I thought that the pound would drop into mid-year and get down under 135 as the initial sell-off, and that has just repeated these cycles over and over again. And I can't necessarily tell you exactly why this approximate 8-year cycle is so uncanny, but when I see it continue to work time and time again, I'll leave that discussion of why it's working on the back burner and just keep doing what I can to capitalize on it and learn from it in the forefront of my work.
Eric, is it human nature to try to apply a reason or an excuse for something happening when, as you said, so often it's just part of a natural cycle and would have happened no matter what?
I think absolutely, and I think that's often what leads to some of the discoveries of these motivating or reasoning factors, the rationale for a particular cycle. And, even you look back centuries and millennia ago, and different things to do with, say, the seasons and the lunar calendar. They may not have understood all the interplay and the different nuances of our solar system, but they knew that it happened, and they knew what to, they were taught by their parents, who were taught by their parents, and so on. And you don't always need to know the reasoning to be able to benefit from, capitalize on something like that, or to prevent damage, prevent losses from a monetary standpoint, prevent different types of damage, both physically and mentally, without knowing exactly what the cause is. And, every day, every year, they're discovering more things that were already recognized, even if they weren't completely understood. So I think that, yes, there is definitely a human intuitive need to try and find out the reasoning, but I think that if you are just adamantly stuck in, put your feet down and you're not going to do anything until you know the reasoning, that's where I think that the trouble comes in, and that really is summing up the debate between fundamentalists and technicians. That technicians are willing to look at certain price patterns that repeat themselves, and it's not always. It's definitely a numbers game, but even if they're not completely understood, and many of these cycles, if they're not perfectly understood, it doesn't mean you ignore them at your own peril. And so that fundamentals, a lot of times people are waiting for the reason. I need to know why before I'll make this move. And like I said, a perfect example was the British pound, that everything technically speaking and cyclically speaking has been saying the pound was likely to get pummeled again. And if you waited for the fundamental to really kick in, the move was already over. And that's why you even get that old adage in the markets of buy the rumor, sell the news, because, the market's always anticipating things in advance. And a fundamental is something that comes in the present. So if you wait for the present, often most of the move is done. So long answer to a simple question of yours, but yes, I do agree that it is our innate need to understand the reasoning for things like this.
We'll have more with Eric Hadik right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Eric Hadik. Eric, how do the cycles play into edible commodities, things like sugar and coffee and cocoa?
Well, one of the things that I've discussed in some of our past interviews late last year, early this year, was another somewhat related 40-year cycle that has timed major food crises going back to the 1700s and even before then, really, and that in almost every instance it was in the second half of the decade during that 40-year cycle, and the latest phase of that was coming into play currently from 2016 to 2019, and that's linked to events in the late 1970s when you saw the California had its worst drought up until recent times. You had parabolic moves in so many of the grains in the late 70s and other edibles, many of them tripling and quadrupling in value during a 1 to 3 year period. And 40 years prior to that, you had the Dust Bowl throughout the U.S. in the late 30s, and that devastated crops. And again, you go back 40 years, every time you've had this type of food crisis, you go back 200 years from now, 5 40-year cycles ago, the second half of the 18 teens were when you had Mount Tambora erupt, the year without a summer in 1816, crops were devastated, and that spread throughout the world into 1819, 1820, creating another food crisis. So the cycles definitely corroborate that and have been pointing to 2016 to 2019 as the next big move up. But I could see that being linked to multiple events, some of them directly impacting the foods and other things like currency, that when you're pricing these crops in a certain currency, even in the U.S. dollar, if the dollar sees a downturn in 2017, 2018, like I think it will, all of a sudden, at least from America's perspective, the price of food, the price of anything priced in dollars, will begin to rise, and that's kind of similar to what you also saw in the late 1970s, a very inflationary move due to the dollar as well as other factors. So I think that we are definitely entering that phase, and we have seen some of the initial surges that were projected for the first half of 2016, and I think that either later in 2016 or early 2017 is when I expect a more sustained move up in a lot of the food markets, grains, sauce, others, to take hold. So I think that you're seeing the initial surge, the one that kind of confirms that a multi-year bottom is taking hold. You probably see some volatile consolidation in the near term, and then preparing for the onset of an even larger degree advance a little bit down the road.
Eric, it's been a little while since we talked about what is Inside Track and how does it work?
Inside Track is, the acronym itself discusses the markets that are focused on, but it is really a combination of technical and psychoanalysis in the financial markets, first and foremost the financial futures, but much broader than that, going into related markets like your gold and silver stocks and stock indices, your different related ETFs that apply to a lot of that analysis. But it is a very broad advisory service that covers a lot of these things. But I should also specify there, broad doesn't mean general, that any of these things that I discuss, I want to bring down to a specific trading strategy or approach so that there's a practical aspect to it, not just a general musing about these bigger cycles. And so that's why I provide a monthly service, an intra-month service, down to a weekly service that gets more numbers intensive, and that's just to really try and capitalize on some of the shorter and intermediate term moves within these bigger cycles that we discuss about in a lot of these interviews.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim. Always a pleasure.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com Radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.